I know that you recently interviewed with CNBC and my buddy Larry Kudlow about an advisory role in the administration on the economic side, so I think you're just the person. With China's talks coming around tomorrow, one question nobody asks. If you look at the talks as circular, when do we start moving now to a place where China becomes less important and we recalibrate around China? It's been 19 months now.
Right. No, the tariffs, when they go in, they have a negative effect right at the beginning, but then the economy starts to equalize around it. And so if we can just get to the point where we have a timeout, then the economy can start to get better. I think actually the more important thing going on in China has been their tightening of shadow financing, which has obliterated their car market, which is what started the whole global manufacturing slump in the first place.
Now, yesterday, Jay Powell, and I like Jay Powell, and I think he has an impossible job, but he definitely protested a bit too much. This is not QE, in no sense QE. I don't know, a rose by any other name would still smell as sweet. Listen, it's a short maturity. They're not technically doing it to stimulate. My problem with QE wasn't so much the stimulative effect, it was the distortion effect. We all know that we're inverted to 3-month bills.
Yep.
Why don't you weigh in?
Yep. I mean, so Chairman Powell talked about two things yesterday. One's not QE and one is. He talked about letting the balance sheet grow naturally with currency in circulation. That's pretty normal for a central bank. But he also talked about recalibrating the level of reserves a little bit higher. Estimates are probably $250 billion higher. And that is undoing part of the QT. And so that is QE. It's just QE on a small scale. And it just shows to me that a lot of the reserves in the system have been frozen by regulation and aren't really there. And so they were not really on top of the level that they needed under their current system to keep control of overnight rates.
Listen, I understand from a marketing standpoint, QE has a negative connotation, and it's getting so more and more because it's manipulating rates. The Bank for International Settlements has done research. A lot of groups have. Yep. In Q3, almost 60% of central banks cut rates. And they found in the research that the unprecedented growth in balance sheets with low rates has caused markets to function wrong. The plumbing isn't working. Your final thought on how this all fits together?
No, I mean, central banks have done a lot of damage on negative interest rates, on holding inverted yield curves. They should concentrate their actions on the short end of the curve, to me, so that the markets can do their job and be more of the transmission mechanism so the economy can grow better.
And my final question is, as I embark on what Jay Powell is going to give us soon about the balance sheet, I guess my final comment is, now that the plumbing is smaller and the markets have grown bigger, I think we're going to be forced to see all central banks have bigger balance sheets to adjust towards their target rate. Is that not correct?
No, I think that's absolutely correct. I don't think they're going to be getting smaller anytime soon.